Good afternoon, everyone. On behalf of Canara Robeco Asset Management Company Limited, we thank you for taking out the time and joining us today. We would also like to extend a warm welcome and thank those who are joining us virtually. We welcome you to the press meet on the announcement of the company's forthcoming IPO. Before we begin, I would like to introduce the management and the distinguished guests who would be addressing today's gathering. From Canara Robeco Asset Management Company Limited, we have with us Mr. Rajneesh Narula, Managing Director and Chief Executive Officer, Ms. Hilda Faber, Chief Operating Officer, Mr. Ashwin Purohit, Chief Financial Officer, Mr. Atit Turakia, Head of Corporate Development and MIS. And representing the BRLMs, we have Mr. Ratnadeep Acharya, Senior Vice President, Investment Banking, SBI Capital Markets Limited, Mr. Kushagra Kumar, ED and Head of BFSI Investment Banking, Axis Capital Limited, and Ms. Sonia Dasgupta, Managing Director and CEO, Investment Banking, JM Financial Limited. Post the presentation, we will welcome questions. For those present here, we will pass around the mic. And for those joining us virtually, you are kindly requested to type your questions in the Q&A panel made available to you. A gentle reminder to kindly identify your name and your media house while asking questions. I will now like to Mr. Ratnadeep Acharya, SBI Capital Markets Limited, to initiate the proceedings.
Good afternoon. Good afternoon. Thank you for sparing time to be here with us for the press meet of Canara Robeco Asset Management Company's IPO press meet. On behalf of Canara Robeco AMC, SBI Capital Markets, and my fellow book runners, Axis Capital and JM Financial Limited, I would like to extend a very, very warm welcome to each one of you to this presser. It is my privilege to introduce Canara Robeco Asset Management Company, India's second oldest asset manager, which is backed by the strong legacy and trusted lineage of Canara Bank and ORIX Corporation Europe. Let me share with you a few highlights about Canara Robeco AMC. As of June 30th, 2025, the company manages 26 schemes, 12 equity, 10 debt, and 4 hybrid funds, with a quarterly average asset under management, or AUM, of over 1.1 trillion. All 7 equity-oriented schemes have over a 10-year vintage and have outperformed their respective benchmarks. CRAMC also has the distinction of having the highest equity mix of 91% compared to the top 10 asset management companies in India. Its equity-oriented AUMs have expanded at a CAGR exceeding 30% between March 2023 and March 2025, positioning it third amongst the top 20 AMCs in India by equity AUM share. Canara Robeco AMC also leads the top 10 AMCs in retail AUM share. Retail investors contribute over 1,011 billion, that is about 87% of the total monthly average assets under management, representing approximately 5.1 million folios, 99% of which are retail investors. CRAMC maintains a robust pan-India distribution network and coverage through 25 branches across 23 cities in 14 states and 2 union territories, supported by a network of 52,000 plus distributors. Consistent growth in revenue and operational performance continues to underscore its strategic focus, financial resilience, and commitment to delivering sustained value to investors. And of course, it is a fantastic way to play the financial of savings theme prevalent in India as we speak. As a left lead banker to the issue, we have worked hand in hand with the management and are extremely excited to bring the solid equity story to you. Let me share a few deal specs with you. The issue is a 100% offer for sale. The price band is fixed between 253 to 266 rupees per equity share. At the top end of the price band, that is at 266 rupees, the IPO size is 1,326 crores. The anchor book and the anchor investor bidding opens on Wednesday, the 8th of October, with the main book opening on the 9th and the IPO closing on the 13th of October 2025. I will request your overwhelming support for this IPO, and may I now request the management to take you through the presentation about Canara Robeco Asset Management Company. Thank you.
Good afternoon, everybody, and thank you very much for coming to this press meet. We're very privileged to have all of you here. I'd like to thank my co-hosts over here for today, starting with the BRLMs, which is SBI Capital, represented by Ratnadeep. Sonia, representing JM, I know that, representing JM Sonia, and of course Kushagra, representing Access Capital as well. Also my team that's here, Hilda, who's the Chief Operating Officer from on deputation from Robeco, ORIX, Ashwin, who's the CFO, and Atit, who heads our corporate development. So welcome everyone, and thank you very much once again for being here. We're very excited to present this company to you. It's a company that started as a JV 18 years ago, which I was part of and I founded. It's been an exciting journey for all of us. 18 in a way is turning mature, I believe, becoming an adult. So I think this represents that phase in our life where the shareholders also think that we are now old enough to fly. So here we are. So I'm going to have a short presentation for you today. The presentation will cover some insights on Canara Robeco, which I will give. It'll be followed by some more data that Atit will share with you, and Ashwin also will share that data, and some strategies, forward strategies that we're looking at, which Hilda will share with you, and then we are open for Q&A as well. Yeah, is that good? Okay, so here we go. All right. Okay, this is a company that's promoted by two shareholders, which is Canara Bank and ORIX Corporation. Canara Bank, I think you're all aware of, needs no introduction. It's a government-owned bank, present pan-India, close to 10,000 branches, wide network, a very solid bank. ORIX Corporation is a Japanese entity listed on the Tokyo and New York stock exchanges, diverse businesses, asset management being one of the verticals that they have. We manage on a quarterly average AUM has been 1.11 trillion or 1,11,000 crores across 26 schemes. We have 91% of our AUM in equity. So we're an equity focused house, and it's by choice. When we started the AMC, we were actually a debt focused house. We had more than 85% of our AUM in debt, but we did a pivot, or we switched it around in terms of the business model, post our learnings from Lehman Brothers and how the markets played out at that time. We found equity markets to be far more resilient during crisis situations. We have over 5 million investor followers. We partner with over 52,000 distribution partners, as Ratnadeep pointed out. We have a lean team of 325 employees, and we're present in over 50 locations. In terms of management, I have actually introduced the people who are here, but the people who are not here, Shri heads our equities. He's extremely capable and a great talent that we have, and very proud to have him on our team. Avnish heads fixed income for us, and Gaurav heads sales and marketing. We have an eminent board. The chairman of our board is the CEO and MD of Canara Bank, Mr. Raju. There is a representation from both ORIX. They have two representatives, and Canara Bank also has two representatives. We also have a very strong independent directors that support us, all of them having over 35 years of experience in the financial services sector. We're an award-winning fund house. We won a lot of awards. This slide doesn't do justice to the number of awards we won. Just as a small sample for you, we won awards in all three categories, which is the fund house category, the scheme category, as well as the fund manager category. So all three places we are present. I'm going to hand you over to Atit, who's going to give you a bit more insight in terms of our numbers. Thanks.
Thanks, Rajneesh. So I'll just take you to some of the highlights of the mutual fund industry, and then I'll talk a little bit about the Canara Robeco's story. So for the mutual fund industry to grow, I mean, one of the precursors for that is to have a very strong economy. India is fortunate that we've been one of the fastest growing economies in the world, and it is anticipated that we'll keep up the growth rate of about 6 to 7% GDP growth for the next 5 years. Once we manage to do that, we'll be one of the top 3 economies in the world. What helps is with the high savings rate that we already have, which if you can see in the map, we have about 29% saving rate, which is one of the highest amongst all the major economies. And with more and more money from the savings flowing into the mutual fund industry, as you can see on the chart on the right-hand side, where almost 7% of the fiscal saving is now coming to the mutual fund industry, more and more money is going to flow into the industry, and that helps the industry to grow. In terms of absolute numbers, the industry has actually grown from about a size of 27 trillion in FY20 to now about 67 trillion, which is a growth of about 2.5 times in a span of just 5 years. It is anticipated that in the next 5 years, again, the industry will grow at least to plus 2.5 times the size to about 150 trillion in FY29. Where is that growth going to come from? If you see in FY20, the equity portion was only about 42% of the AUM, whereas that has now grown up to 62% of the AUM for the industry. Now, that is good for us because we as a company, like Rajneesh mentioned, 91% of our AUM comes from equities AUM. One of the backbones of the growth of the industry has been the SIP book. As you are aware, we have almost about 26,900 crores of SIP that are money that is coming into the industry on a monthly basis. Now that has actually grown quite significantly over the last 5 years. It's been growing at a CAGR of about 25%. Typically, all the SIPs are from retail investors, and that is reflected in the increase in the share of the retail investors as part of the total AUM. The total AUM in FY20, only for 52% of the investors were from the retail segment. Now that has grown up to 61%, largely on account of SIP and the equity segment growing. Now, I'll take you through some of the key factors for Canara Robeco. We're privileged to have a very esteemed parentage with Canara Bank on one side and ORIX Corporation on the other. What Canara Bank has to offer Canara Robeco is this huge branch network with more than 9,800 branches spread all across the country, which effectively gives us touch points to in all these locations. ORIX Corporation, on the other end, has shared with his expertise in investment management philosophy, product development, and also on the risk management framework. Canara Robeco as a company has grown quite significantly over the last 2.5 odd years. We were about 625 billion rupees in March of 23. Now we've grown to 1.1 trillion. So which is a growth of about 1.8x in a span of just 2.5 years. In terms of the equity book also, equity books in the span has doubled from about 553 million to about 553 billion to about 1.03 trillion. So about 91% of our AUM comes from the equity side. And why is it important is, as you can see, we have one of the highest shares of equity book in our overall AUM when you compare it to the top 10 AMCs and also the third highest amongst the top 20 AMCs. In terms of our SIP book also, we managed to retain a lot of the AUM that is coming from the SIPs. Our SIP book was contributing to about 25% of our total AUM in March of 23. Now that has grown to about 33% of our total AUM coming from the SIPs. We have also broad-based asset book, which has increased from 1.1 million to 1.8 million folios in a span of just 2.5 years, which is a growth of 1.6x. We are fortunate to have 7 schemes which have a lineage of more than 10 years. All our 7 schemes with a lineage of more than 10 years has managed to beat the benchmark and hence generating alpha for our investor base. We are about 5.05 million folios and it has been growing quite steadily at a CAGR of about 7% over the last 2.5 odd years. As Rajneesh mentioned, we are an equity focused fund house and a lot of our AUM comes from B30 cities. We are the highest when you compare it to the top 10 AMCs in terms of our share in the B30 to our total AUM, and second highest when you compare it to the top 20 AMCs. In terms of our retail participation, retail plus HNIs also, we have a very high share of our AUM coming from them. At about 87% of our AUM coming from the retail plus HNI segment, again placing us highest amongst the top 10 and 4th highest amongst the top 20 AMCs. Excuse me. We have a very wide-based distribution network with more than 52,000 distributors spread all across the country. In terms of the contribution to our AUM, our largest contributors are the mutual fund distributors, which is at 33.5%, followed by the national distributors at about 27%, and our direct channel at about 26.6%. Excuse me. As you can see, our direct channel is something that has been growing. It has grown from 22% to 26% in the last 2.5 years. Thank you. Canara Robeco has also been building up its digital infrastructure. We now have an app which has more than 7 lakh downloads on both iOS and Apple Store and the Play Store. We also have a dedicated website for our distributors, a portal through which the distributors can transact and also raise service requests. We also have a very advanced state-of-the-art website through which our retail participants can come and participate into Canara Robeco schemes. I request Ashwin to please share more information on the financials of the company.
Good afternoon. Thank you very much, Adit. So if you see the top left of the highlighted matrix, you will see the increase in the revenue. Our revenue has been increased at the rate of 59%. The fundamental attribute to the increase in the revenue is the increase in the AUM, which is also increased in the same size of 37%. The top right of the matrix, which shows the cost efficiency, which has brought down from the 50% to 34%, which is one of the best in the industry. If you see the bottom left, the PAT margin has increased at the rate of 39%, which is one of the highest. And the return on equity is at 23%, which is one of the best in the industry. I would like to request Hilda to give something on the strategy, please.
Next slide.
Next slide. Thanks.
Hi, welcome everyone. So to start with, what I want to say is that we believe in what we're doing. So our strategies will be mainly focused on enhancing what we're already focusing on. To start with, we're focused on delivering sustained investment performance. Our performance is at the moment very good, and we want to keep focusing on this. So we focus on very strong research, and we focus on companies that have a strong management, a balance sheet that is qualitative and has potential for growth. So this is something that we're already doing and we will keep focusing on. Secondly is we'll focus on growing our distribution and geographical presence. We will leverage Canara's bank channel into the pan-India, but mainly the big 30 cities, which are currently booming and are very good presence there. We will also continue to undertake marketing activities, making our brand known, and focusing on brand recognition in the country. And we also think that this IPO will definitely help with that. Thirdly is we'll focus on diversifying our AUM, and we'll focus on different asset classes and product offerings. So to start with, we'll focus on increasing our contribution of debt. So although we are mainly fixed income equity, and this is something that we will keep focusing on, we will also focus on fixed income. We'll do this by undertaking new marketing initiatives, but we will also think about potentially launching new products. We will also evaluate new products, specialized funds. Fourthly is we'll keep leveraging technology to improve our efficiency. So like Atit already mentioned, we have a very strong digital platform right now, and we'll keep focusing on enhancing this, but also internally focusing on improving our digital capabilities to improve our efficiency. So we'll have a new CRM software and those kind of things. And finally, and I think that's most important in our industry, we'll keep focusing on enhancing our employee value proposition. The people in our industry are most important, and they're also at the forefront of our strategy, because all these 4 previous strategies you can't do without the right people. So we'll focus on attracting new and qualified talent, but also the current employees will be well taken care of. So we're introducing an ESOP plan, and we'll keep focusing on the things that we're already doing, having a very healthy, balanced work life, employee education, and just employee recognition. So this is something that we'll keep focusing on. And we believe that these strategies will help us grow even further in the future. Thank you. Thank you. We will now share for the Q&A session. The initial few questions from those who've joined us here in person, followed by the online questions. I would request everyone to kindly post their questions in the Q&A panel made available to you. And a gentle reminder to kindly identify and asking the question.
So my name is Nitin Malani from Monetimes. You are the second mutual fund after SBI. SBI is about 16% of the industry, and we are up to 7th, about 6%. So what happened? And my second question is on the slide. It's Hilda present, if you can bring that slide. Yeah, I think somebody was mentioned. Software. So I'm sorry if you are still
Thank you, Nikhil, for the questions. So very good questions to start with. So let me start with the first part of your question, which is to do with another mutual fund house that started before us or around the same time, having a different market share than us. I can only talk about from when the JV started, okay, which is about 18 years ago. The bank managed the asset management company before that, and they had their own strategies to develop that business at that point in time. So it will not be fair for me to look at that. But what is fair to say is that we started this company in September of 2007. Within 6 months, we were hit by the Lehman Brothers. 2 other JVs started at the same time as us, which had the similar construct as us, which means a public sector bank and a multinational as their partners. All the other 3 failed. If you go and check your history, all the other 3 failed. We are the only ones that survived during that time. And since then, our journey has been really very good. We've been one of the fastest growing AMCs. Over the last 5 years, if you look at us, we've grown at over 40%, where the industry has grown at 20%. But we've grown in select markets. So if you look at us, we are predominantly an equity-focused house, where others may have different strategies and may focus on businesses which we currently don't think are suitable for us. So, for example, if you look at the shorter end of the fixed income side, where it's mainly institutional money that comes in, our focus is more on equity and retail. That's our focus. That's our primary focus. So, AUM for us is not really the criteria for judging how well we've done. It is more about where we want to build, how we want to build, and is it sustainable or not. So we've gone equity, we've gone retail, we've gone deep, because we want to make sure that the tree that is standing is very strong. Coming back to the question for Hilda on manual, there are some elements. It's very few elements that are left that still, on a maker-checker basis, will still be manual. We're just upgrading those as well. So it's not. There's a whole lot of things, critical things, which are not automated or digitalized. Yeah.
18 years now.
Yeah.
Yeah. Whether it is small production, large production,
So that's why we have labor. If you take away manual reporting completely, at the end of the day, there is an advantage, a distinct advantage. At the end of the day, you can automate as much as you want, but there will be somebody who will look at it, right? So, yeah, you can't take away manual stuff from everything in life, right?
There is one more question.
Please, excuse me, please.
Just one question.
No, sir.
When we say,
Give chance to others, sir.
the last, when we say the manual behind in our mind, 1992 scale, where also there was manual. So
I think that's not for me to answer. I think that's a different environment and different time period, and it's got nothing to do with the company. Okay, nothing to do with the company. I think you need to respect the fact that there is a need at points in time where manual is excessively essential. Okay, so let me give an example. How comfortable will you be with an autonomous car with no driver? Have you ever sat in one? It's a frightening experience. I've sat in one. Okay, where the steering wheel moves and there is nobody there and you're scared sitting at the back. Okay, so let's not emphasize the technology part and do it with manual. There is a balance for both, and you need to respect both sides. Thank you.
So, mutual fund for detailed presentation and briefing. I'm Dami from FinTech News News. It appears technology has been core to your strategy. What are the technologies deployed your company, AI, ML, and others, which brings the productivity efficiency for the employees as well as which benefit the customers? Thanks.
All right. Oops. Okay. Sorry. Thank you for the question. So for us, AI at the moment is an evolving technology. We are looking at how that will help us more mainly on the customer services area as of now. And over time, we will also look at whether these can be embedded in our investment management processes, but that's over time. But clearly, as of now, the digital era is very much established within the company. We have invested quite a bit on our digital framework. There are opportunities for our investors and distributors to connect with us or invest through our digital platforms. So clearly, that's the investments already made. But specifically on AI, it is work in progress as far as we are concerned, but we see it impacting first is in the customer service and bringing a bit of operational efficiencies there.
So we have a question online. It says, explain your business model on third-party partners and distributors.
Okay, thank you for that question. So if you look at the way the industry itself, the model is there, the model itself relies on third-party distribution. The model is not having captive distribution yourself, because then the ability for you to reach out to all parts of the country is limited. So that's the business model itself. And Canara Bank, being one of the promoters, contributes about 8% of our AUM, which to us is very healthy and will perhaps grow over time. But clearly, the very fact that we have so many distribution partners, it means that they understand our business, are comfortable with our products we sell. And at this stage is that we evaluate all options, all new opportunities. They come up for review every month. So we look at it on a monthly basis. We will launch SIFs or similar initiatives going forward as and when we believe the timing is right and there's an opportunity for us to do so. And there's enough investor demand as well.
Do you have any initiatives in financial literacy?
Actually, a very, very good question.
Thank you.
We did have a very good program on financial literacy. And this was extremely well established prior to COVID, where we would teach children between the ages of 12 and 14. So we would take designated schools. They were basically the government schools that we would address because that was for us the place where it was needed the most. And basically spread financial literacy right through the schools. And we've covered a lot of schools through that program. During COVID, we unfortunately needed to take that program off because it wasn't physically possible for us to visit those schools. But we address it a little differently now. We enable children to get to school. So what we try and do is a combination of a lot of things, but primarily through a mode where we give cycles away to school children, especially who stay far away from their school, and is the first primary mode of transport in that family. So that's something that we consciously look for. And that's when we give it out. And it's an all India program. We do it across the country. So we believe that enables people to get to school to start with. And then, of course, it's also a green initiative because it doesn't pollute. And it's also, in a way, related to health because you get exercise. So, and it also brings a culture that is part of our sponsorship or part of our promoters, which is Dutch. If you know, in Holland, there are more cycles than people.
Thank you.
And also to add, we have a bus initiative where we have a mobile bus that goes across in various states that actually promote financial literacy. It just stops randomly on the road and gets people in the bus and then talks about financial literacy. Yeah. Thank you.
Hi, sir. This is Anisha from Money Control. I just wanted to know what was the rationale behind the price band? Because compared to some of the other listed peers, this is quite on the lower end.
Well, first of all, thank you for your question, and I was expecting it to come at some stage. So the price band is for us a process. It's part through a book building process. I have the BILMs who are here, and they're the ones who would basically guide and recommend to our board, who would then accept it. But I'm going to give this question across to the BILMs to take you through it.
So if you are finding it, that means you find the price attractive, right? So I think, like Rajneesh has rightly said, there are many factors that go into pricing, and the ethos of both the shareholders, as you know, it is an offer for sale. Both the shareholders are very keen to get in, retail shareholders through the IPO and be their long-term partners going forward. And they want to ensure that the new partner also has a great experience, just as the two of them. On the scientific side, as you know, there is a scientific process where we go around and discover a price, basis comps, our initial feedback from investors on the roadshow meetings, and clearly both the shareholders were keen that this be attractively priced so that their shareholders remain with them for the long haul.
Radha, do you want to add something, or Kushagra?
No, I think Sonia summed it up well. If you look at even the other AMCs, pretty much, they have gone at triple digit, except for one. And the idea is, of course, incoming shareholders, especially retail, would find it attractive. when the price band is the way it is. So that's the thought process which went behind. And of course, there was obviously a fair bit of thought which went into designing the pricing band so that incoming shareholders, it's an AMC, so therefore, it is absolutely very, very critical, important for the stock to list and trade well because they manage public money. And that's why, the price band is, and the very fact it got your attention, says it all, right?
Kushagra? Yeah, so, it has gone through a scientific process in terms of discovery as far as anchor investors are concerned. So anchor list will come out on Wednesday and we'll see all the great teams have participated. So like my RLMs have mentioned, the idea is to let the new investors also make money, let them also enjoy some bit of money left on the table. And with that, we have priced it so that it remains attractive for everyone to participate.
Is it not because of concerns of how the market is? Because the IPO market has not been as wonderful as we had hoped it to be. Even though we have had a lot of large names that have been listing maybe over the last couple of months. Even if you look at it, is there a bit of caution that has come into it?
No, I think given the company's performance, we didn't have any doubt on that side. So it's not to ensure that this IPO sails through. I'm sure when you look at the anchor investor list, which comes out on Wednesday, you will understand that that's none of our concern as of now. Given the business of the company itself involves retail investors, 91% of the money comes from retail investors as far as Canara Robeco is concerned. It's very important that retail investors make money if they are subscribing to the IPO, because it will have a positive effect on the core business, and therefore pricing has been done in a way that it remains attractive for everyone. Nobody has reasons to complain.
And I'll just add that if you look at you mentioned about being cautious about IPOs. I mean, look at the number of IPOs we have this week itself. I mean, it is a full calendar. And there is obviously it's a fantastic franchise. I mean, leave aside the macros in general. The franchise is absolutely stellar, and the management has done a terrific job in terms of building, scaling, and if you see the profitability as well, it's a phenomenal franchise. So there's absolutely no concerns in terms of fundamentals. It is just to kind of make sure people especially retail find it attractive to come and participate, and also it's a strategy to increase retail participation.
If I can just add a different perspective for you, because you talked about IPOs and the number they are. I'll take you back to when it was really bad for us, which means as a market in total and for a country is COVID. And if you look in the financial services sector during that period, the three arms in there, which are banks, insurance companies, and asset management, the only one that did as an industry very well during that period is asset management. So pricing has got nothing to do with what's happening in the IPO market. We're very confident of the industry and even more confident about ourselves.
Hi, sir. Agni from NDTV Profit. So just wanted to quickly check up on something. So you're diluting Canara is diluting 13% stake, but when the RBI approval came in December, there was a condition to maintain the Canara Bank stakeholding at 30% by October of 2029. So the RHP mentions there will be some pro rata decisions taken if minimum public shareholding norms are to be followed through. But what I wanted to check was if MPS compliance does come up, will that be done through, I don't know, offloading shares in the secondary market, or will you be looking for new institutional investors as and when they come in?
We will meet the MPS.
MPS compliant compliant now, right? Because 25% of the shareholding will be with public. So it is MPS compliant. I think what you mean to ask is that if RBI needs the bank to dilute.
Yes,
so that's not MPS, just to correct the question. So, at any point of time, a company has many options. And as you can see, it's 3 years out, right? So, they will evaluate all the options closer And along the way, as you know, the entire issue will get locked in for a particular amount of time, and thereafter the shareholders, will take a decision depending upon their needs, the market, AMC's needs. It's difficult to hazard a guess right now on which route they will take.
Okay, thank you. So, SIP customers in particular are fluctuating. How do you respond to the fast changing customer preferences which may impact your business mix? And how do you cope up with the market share to defend the market share and enhance it?
So to me, I think the proof of the pudding is in the eating, right? So investment performance, basically making sure the trust in the company, the integrity of your company is first of all is something that you maintain, uphold. It's extremely important because in this business, if you lose trust, you really have no right to exist. Second, of course, is investment performance. You need to make sure that performance, right through good times and bad times, you're able to explain your performance and your views. Three, of course, having great risk management tools and processes embedded within the investment processes to make sure those downturns are well protected. And of course, it's also constant education. For us, we've always said, please look at an investment, especially with us, because we are an equity-focused house, with a 3 to 5 year minimum time horizon, because that's what we look at as well. So to us, the equity markets, as you're aware, is not for the weak-hearted, right? So it's meant for people who can take the ups and the downs. Yes.
Hi, this is Aryan Khanna from Informist Media. So two questions. One is, you mentioned as part of the strategy that you would plan to launch some debt funds as well. Is it broadly to round out the product mix, or is there something post IPO that you feel that you would want to move from the equity focused share? Is that, are you next on the equity side? So that's one part. And then the second one is, Canara currently is about 8% of the distribution mix. Are you expecting that to go up or down in the, say, next 4 quarters? Will the IPO have a impact on that? Thank you.
Well, thank you, Aryan, for your question. The answer to your question basically is forward-looking. So I'm going to restrict it to a certain context. So for us, I believe we will always be within the 85 to 95 range as far as equity is concerned. So we are predominantly an equity-focused fund house. It doesn't mean that fixed income is not priority within the system. It will grow. So if I, just for argument's sake, double equity today, equity is over 1 lakh crores, if I double to 2 lakh crores, right? And if, say, 10% of that is fixed income, 10% of 2 lakh crores is also doubling the fixed income book. So clearly we will grow fixed income. The products that we may launch on the fixed income space is to fill up some gaps that we may see, an opportunity that we see in the marketplace. So that's clearly where we are positioned. But for us in the fixed income space, we don't compete on absolute returns. I think we're quite different from that perspective. We compete on risk-adjusted returns. We are very careful with credit calls in our fixed income portfolios. We've learned what happened in previous market cycles when that can become quite tricky. And hence we refrain from taking aggressive credit calls. We are very conservative in the credit side. And hence the fixed income positioning for us reflects that. Okay. On Canara Bank distribution, so let me flip that for you. Would you be happier if Canara Bank was 92% of our AUM and third party was 8%? So let's flip the question, right? To me, external validation is the most important. When the outside market trusts you, that's far more, to me, valuable than your parent. Your parent is expected to trust a child, right? But when the external market, when your uncles and aunts say, yeah, you're good beta, then it's good.
We'll take one last question online. This is from Ms. Gitanjali Kedia from SP Tosian Investment Advisors. She asks, what is the AUM mix between active and passive managed schemes? She also says that despite high equity mix, revenue yield is on the lower side.
Okay, so a very good question. So the active versus passive, we are 100% active. So I think it answers how much we are on passive. And we intend to be an active player on the active side. Clearly, we believe that's how you add alpha in our business. The other question was to do with... Okay, yes. So I think we have a different way of looking at yields in our business. So I'm going to just give you a little example which perhaps may illustrate what I'm trying to say. So take a phone, for example. The manufacturer of the phone, if there's a margin of 100 rupees on it, the day that manufacturer sells that phone to you, the 100 rupees is realized. And that's the end of it. They get no more money from that phone. It's gone. In our business, if I get 100 rupees as an investment, I get revenue on that money, or I earn management fees on the money for year 1, year 2, year 3. So the longer it stays, the longer I earn revenues from it. 2, because I'm equity, and I believe 7 out of 10 years equity will outperform any other asset class, the potential of that 100 going to 110, 120 is also very high. So my revenue only increases from the 100 rupees investment to start with. So yield to me is not the way you look at our business. PAT is probably a more better indicator, as well as then cost to income ratio, because then it tells you how much operating leverage you have in our business.
Thank you. I will now invite Mr. Kushagra Kumar, Axis Capital Limited, to give the vote of thanks.
Before we finish, let me summarize a few key points for you. The issue opens on Thursday, 9th of October, and closes on Monday, 13th of October. The anchor allotment will happen on 8th October, Wednesday, and you will get to see that. The price band is rupees 253 to 266 per share, and the bid lot size is 56 shares and multiples thereof. Thank you so much for listening to us patiently. We hope to receive your support for this issuance, and please join us for lunch now. If you have any more questions, we are all here. Please feel free to ask. Thank you.
If I might just add one last comment before you leave, is that I believe we've built a company which is very special. I believe that this is just one step in the milestones that we have to achieve. But I also believe it's a very beautiful company. And it is a great opportunity that I find for my colleagues and myself to actually participate, because the shareholders are diluting, to buy something. But I'm hoping, and my desire, personal desire, is that this will be one stock that people, when they buy, will keep it for generations. Thank you.